Good morning, traders. It is Monday, May 19th. Hopefully everyone had a great weekend. It is still a long holiday here in Canada today, or not in Canada, in Canada today. And just a quick reminder, if you're listening to me right now, 43% of you guys aren't subscribed to my channel. So just hit the subscribe button. That way you'll get whenever I post a new video, you can get some market analysis, trade ideas, and feel free to share this with your friends. The more these videos the more likes we get, the more comments we get, the more views, obviously, the more I know you guys appreciate it and I can put out more content. And I have a big list of over 100 videos on trading and technical analysis that I am slowly working through in the order that I'm going to start to produce and release them so you guys can learn the markets and really get in the zone with them. Anyways, take care. Anyway, let's take a look at the markets. We are seeing equities trade lower this morning. The NASDAQ down 1.5%, the S&P 500 down 1%, the Russell down 1.4%. So it's a little bit of a broad market rally, tech and even small caps. Overall, though, when we look at the market from a short-term standpoint, we've obviously been in a short-term uptrend on the 30-minute chart. We did get into a little bit of a FOMO move on Friday heading into the close, meaning I think some shorts were probably covering it. Really just put a heavy weight on everybody buying shares, and they didn't care what price they were paying. They were just hitting the ask, saying, get me in, or let me cover my short. And usually that creates a short-term pullback in the market. And that's what we've seen here. If we look over here, we had, If we look over here, we had obviously FOMO, we had FOMO over here, we had FOMO over here, which not always will it pull back. Sometimes it might drag out a bit longer and go sideways or pull back. But when the trend is up, we don't ever look to short or expect the market to drop sharply. What we look for are these panic selling waves, which are usually sell-offs in the market. They're pullbacks. And these red levels here, these FOMOs, are just short-term overbought levels. Expect a pause or pullback before it goes higher because the trend is up and it's green. So that's kind of where we are. Markets are set to open a little bit lower. I think we're going to have some big news today, or not today, this week, probably around Trump and Canada. There's all kinds of interesting stuff coming down the pike. But overall, when we look at the daily chart, obviously it's had a very strong run up here. It's moved right into resistance, right where the market trend had changed for us. It went from an uptrend right here to a downtrend. And since then, it's been carving out a bottom, and now it is kind of back above all of its key moving averages and trending higher. And today is a little bit of a pause or pullback, which makes sense because it's had a very strong run. If we actually look at it from a shorter term standpoint and we look at Fibonacci extensions, we had, based on this low, the market rallied up and then it sold down this day and then continued to move higher. This was a pretty significant pivot on the chart, which if we draw this out, you can see this is that level. So we had this initial high volatility bottom, the complete panic, everybody moved out of the market, and then of course it changed directions right when everybody's betting on falling pricing. But here we had this move up, it pulled back, we hit the 618, and then we've gone up, we've hit this 100% measured move. So now it is running into some resistance and trying to figure out what to do here. And it's pretty much the same for the NASDAQ as well. If we take a look, we have seen utilities definitely muscling their way higher. 2 explosive days back to back for utilities. So money's definitely moving into this defensive play. Did dip into an oversold territory and really took off after that. Typically when we see utilities outperform and dramatically outperform the stock market, it can usually mean the market's ready for a little pause or pullback. So we need to be aware of that. And of course, FOMO is also giving us a little bit of a warning that we should expect some pause or pullback as well. If we take a look over at the dollar's down about 0.9% this morning. So having a pullback, again, it's been stair-stepping its way up, hit the 50-day moving average, also hit underneath resistance here where it had this bounce and then a breakdown. And so it's trying to figure out what it wants to do. Overall, the short-term trend is up. It does have a little bit of an ABC correction from the looks of it, an ABC correction, and the break of this pivot low is usually what can actually become a bullish signal. People will panic out of the dollar and then it shakes itself out and then can start another leg higher. But again, it is longer term in a downtrend trying to find a bottom, and we'll see if it does get traction this week and pushes higher. We got the dollar falling today. We have got gold and silver moving up. So gold is up 1.8% this morning. It's kind of put in a little bit of a double top here. It came down to an oversold territory. It's trying to find a bounce. Overall, again, the long-term trend of gold is still up. The short-term trend here is kind of neutral. It's orange bars. It's gone from a green, from oversold levels where it pops and gets bought, to losing its momentum, and now it's trying to figure out what it's going to do. It is going to open at 32.45, which is right about here. So we'll see how gold plays out. The long-term trend is still up. As you know, my long-term projection here does show these tweezer weeks on the monthly candles, which show signs of a topping phase. We have blown past our 2,800 level up to these highs, which is a 20+% move in gold. And every time we've seen a major measure move get hit, we have seen gold run another 22 to 25 or so +%, and then it puts in a massive double top or a massive top and corrects for several months or years. And so that's where I believe we could be at, but you don't want to bet against this just yet. Gold is still holding up. It's flagging sideways. It could have a launch pad here and eventually have another push higher. So you definitely don't want to obviously bet on falling pricing when the trend is going up. A trend is more likely to continue than it is to reverse direction. So trying to pick a top or a bottom is a dangerous game. If we take a look over at our hot list, we have Bitcoin. Bitcoin's been flagging sideways, down about 1.5% this morning, kind of flagging sideways up at pretty major resistance area, trying to figure out if it is going to break and extend higher. I think if the stock market does rally and have another leg higher, we're going to see Bitcoin really pop and I think explode to the upside. If not, if the market rolls over, then we're probably going to see Bitcoin sell off and fizzle right back out again, which is just as likely, I think. I think it's kind of a coin toss here of how these markets are going to move. If we take a look at URA, which we are also long, we have hit a target, and that is pulling back a little bit this morning. Not too much, but it's had a very nice run to the upside. We've hit a target with our band strategy. And really, it's been trading sideways the last couple of trading sessions, flagging out. It's above all the key moving averages. And we'll see. Again, everything comes down to understanding the overall stock market tide. If the stock market is going down, it is going to pull all the sectors down with it in most cases. If the stock market trend is up and the stock market rallies, it is going to drag all of the sectors up with it. Sectors are just kind of like a high leveraged way of taking advantage of the markets. If the stock market rallies 5%, a sector could rally 10 or 15% or more. But they all move together. They're kind of like a flock of birds or a school of fish. And that is the most important thing, is know what the stock indices are doing and then trade with that trend using more volatile plays like sectors or individual stocks if you want more juice. Other than that, that's kind of about it at this point. I don't see a whole lot of excitement just yet. We'll see how the market shakes out today. I'm expecting another volatile week as normal, and we'll just go from there. That's it. Bye-bye.